Hello traders, and welcome to part 3 of my Elliot wave theory trading series. So in part 1 we talked about what is Elliot wave theory and how to trade it. In part 2 we talked about ratios, alternations, and wave extensions. And now today in part 3 we will be talking about corrective waves, which are the ABC wave sequences that you see after a 5-wave pattern. Today we'll be going over 3 types of these corrections, which are flats, triangles, and zigzags. And if you remember from before, a 5-wave sequence, right, like this one right here, is also a zigzag, but you can also have ABC patterns that are zigzags as well. And it's important to note that after a corrective wave sequence has finished, typically you'll see a fresh new wave 1 to occur, and then price continues going upward. So without further ado, let's first label this sequence right here, and then we are going to go into other possible corrective waves and how to trade off of them so you can buy into wave 1 and catch an entire uptrend from the start. So first let's look at wave A and count the wave. I counted the wave from 398 down to 280. Reason I didn't use this low was many exchanges did not have a low that was this low. Many exchanges more had lows around the 260 to 280 level, so that's why I'm more confident that this is wave A. Then we have wave B that goes up to here, and then we have wave C that goes down to here. So this is what it looks like, A, B, C, for this zigzag pattern we have here. Now what we can also notice here is using this low and this high, that this is 50% of wave A, as you can see here. Wave B comes up, goes 50% up to around 340, and then gets resistance, and wave C begins and comes down here. And we have an evening star formation right here as well, with not much volume on this candle right here, the doji candle, and then a lot more volume coming downward this way, which makes sense. So what I also want to talk about, like I've talked about in my second video, is these relationships between the waves. You can't really see it in this one because wave C doesn't look like it's complete yet, but what you'll typically see is that wave A will equal wave C in magnitude. So what that means is that if wave A went down 118, and typically what you see is wave C to go down the same amount. But also there are other relationships that can occur. And the other relationship that can occur, the second most common, is wave C being 0.618. So that means that if wave A went down 100, then wave C will probably go down around 62, because that's 0.618 of 100, from, of course, the top of wave B, which is the start of wave C, as you would know. And then the third most common is that wave C is 1.618 extension of wave A. So if wave A goes down 100, wave C would go down around 162. 161.8, but 162-ish from here, like that. And when will you see these things happening? When you see very strong movement like this, you typically don't see 1.618 extension down here, because if you did, it would be in the 100s. Ethereum would crash down to the 100s, which I don't think is too likely to happen right now. Still could, but I don't really see that happening. And if they're equal to each other, then this wave would end around here. And if this was 0.618 of this wave, then it would end right here, like it has. And when I say 0.618, I'm talking about the magnitude, not the actual wave. So like, when I say that, I don't mean like this. I mean, like I said before, if this went down 118, you would expect that around 0.618 of 118 will be how much this went down. And after wave C completes, you typically see the beginning of wave 1. And you might be wondering, well, how do I spot wave 1? Usually wave C has declining volume in low tails, like you can see right here. And this is the sign that we have a new wave coming in for a new uptrend. The low volume is here, and if we can see a very strong bullish candle here, it might be this one. Could even be this one, but I think it's more likely to be this one. When we see a strong bullish candle here that carries the market upward, then we can expect that this is wave 1 if it surpasses the 340 or hits the 340. And that's wave 1. And then you'll see a wave 2, 3, and then we'll very likely break the highs of Ethereum of around 420 over here if this turned into another 5-wave sequence. after this A, B, C zigzag. So like I mentioned, there are two other patterns of Elliott wave theory corrections, and I'm going to show you guys them right now. So I'm using this site right now, which is stocks.fi, and I will be attaching this in the description as well, if you want to check that out. So what we have here are the three types of corrective patterns that I've mentioned. Really ignore this because this is quite rare. And just to zoom in on these, we have the zigzag that we just talked about. It looks like that. We have an ABC sequence, and then you have a flat as well, where you have A, B, C like this. And it says here, note that the A and B waves are corrective patterns, as you can see right there. And then the third one that you typically see is a triangle. And there are different kinds of triangles that you can see. Typically, it's going to be a symmetrical triangle or a barrier triangle. And those are the only two you really need to focus on. This is a symmetrical triangle right here. And instead of saying ABC, we like to label triangles as ABCDE. You can see here that if you drew a trend line, then start of the origin would line up with B and D perfectly, and then ACE would line up perfectly too for this symmetrical triangle, and then price breaks out in the direction of the new trend. You'll also see barrier triangles, which really look like this. So this would be a barrier triangle. So if we had this pattern right here, where we have some strong resistance, but some also support that's moving up and up, you typically see a pattern, B, C, D, E, and then wave 1 that continues the uptrend. And that can happen as well for an ABC pattern. So these are the three kinds of patterns. There are more sub-patterns within these, but I don't really want to go into those too much because they can get quite complicated and into semantics. So if you would like to learn more about some flats and some triangles and to get more into depth about what they look like, I will attach a link in the comments in the description that you can check out. So what we've gone over today is this ABC wave sequence that we are in, and the zigzag that we have right here. And also we want to talk about what I mentioned before is the sign of wave 1. And for a quick little price prediction at the end of this video that I'm going to be making right now, I would say that it's more likely than not that this is going to turn bullish. I think that with this very strong low tail, and with C having these dojis with very low tails as well, with this being a tweezer bottom right here, meaning that these share low, and we have around a weak bearish candle, and then about an indecision candle here that could turn here or turn here as well. And I think that as long as this doesn't make any new lows, that we are due for a new uptrend quite soon. So that's my 2 cents on what might happen. And like I've mentioned, this is what I see right here. Excuse me. That this zigzag A, B, C, with the B pattern being a 50% of A, it could also have been 61.8. That would have been fine as well. And then C, that looks like it's around the lows of wave A. And then we get this, likely, I think. Yeah, wave 1. Maybe wave 1 won't be that strong, but we'll see. So I think that's one variation that might occur. This is not bound to occur. This is not definite to occur in any way. I would just say that it's likely that price is going to create a new uptrend soon. And if it doesn't, if price goes down, then I would expect it to go down to around these levels. And I don't think it's going to break the top of wave 1. I don't think it's going to go all the way down to here because that wouldn't really make too much sense. The market's already carried down here. And I don't think that there are many interested sellers at these levels. But that's just my 2 cents. You might disagree on where price is likely to go. But I think, yeah, I think that price will likely go up from here and create wave 1, or price goes down to here to complete wave C, so that wave C is equal to wave A, like I mentioned about 5 minutes ago in the video, and then you see wave 1. So that's going to be it for my corrective patterns of Elliott wave theory. If you have any questions about these ABC and ABCDE for triangles patterns, then feel free to leave them in the comments. Thanks for watching.